Okay, and we are live. Good morning, good afternoon, good evening, good day. Just depends on where you are and when you're listening to this broadcast. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits, and property management services. Here at Lyonsview Realty, we are committed to ensuring that you have the resources, the information, and the tips to assist you in making the best financial decisions. Financial Fridays provides you with content to help you maximize your wealth building power now and in the future. Financial Fridays helps you stay current on those trends that impact your bottom line. So we stream live on YouTube and Facebook, also on LinkedIn here on Fridays at 9:30 Eastern Standard Time. Want you to share, like, and subscribe to our YouTube channel, and you can catch the replay on YouTube anytime. So today we have a very special guest. I'd like to introduce Mr. Moton from New City Commercial. How are you doing today, sir?
Good morning, Clara. I'm doing well. I am doing well. It's a fabulous Friday, and I always have time to talk
Yes,
about finance and real estate. Absolutely.
in- indeed. Mr. Moton, he assists business owners and investors acquire real estate for commercial use. He's got products for restaurant acquisition loans, office condo, beauty salons, new construction, working capital equipment, HOA, bridge loans, DSCR, SBA, fix and flips. Like the man is just phenomenal. He's got a lot of things. We're not going to talk about all of those today. But, you can always get in touch with him about any of his other products. But we're going to start. If you could just tell us a little bit about yourself and your company and how you got started in this business.
Sure. Thank you. Again, my name is Greg Moton. I'm the president of New City Commercial Capital. I started in the real estate business way back in 2002. I was a residential guy, so I was a residential agent, and I did residential financing. Later on in life, I decided that I wanted to jump over to the commercial side. So I did that back in 2010, and then I opened my shop in 2011. And since that time, I finance. My specialty is I work with investors and I work with business owners because those are the catalysts of how our country goes back and forth. You need businesses to hire people, employ people, which helps feed families, and investors. They kind of have the same role. So my investment products, cover those two sectors.
Awesome. And which locations, like which states do you service?
Well, I said I do financing in 48 states. I cannot do anything in Alaska and Hawaii right now, but I'm working on it.
Okay. And you were saying your ideal client are businesses. So those are people who employ other people
Yes.
or investors who are investing in real estate. Now, is it any real estate or is it just real estate for commercial use?
So I can assist investors in 1 to 4 family properties and commercial properties. As long as it's an investment property, I can get it done. As far as businesses, I cover commercial real estate purchases, refinances, and lines of credit and partner buyouts. I can do a few things. And as far as property types, I can finance just about anything commercial, including land, including new construction from ground up. And I have products for business owners where there's 100% financing, which requires zero out of pocket through the SBA.
Awesome. Well, let's jump into it. Which product would you like to talk about first?
Well, I would like to talk about the SBA 7A loan that I currently am offering.
Okay.
So I use I work with a lot of businesses. As I said, I work in 48 states, and I work with a ton of businesses, and I understand the business's needs. Now, the, the thing with the SBA 7A loan is, unlike most commercial loans, you don't need to put 25% to 30% down. With the SBA, you could do a maximum of 10% down, or a minimum of 100% financing, and it helps businesses that
Okay.
start up. It can help an existing business expand to a new locate, a second location, a third location. The loan goes up to $5 million, and yes, you can get $5 million at 100% financing. I have done that for several businesses. It just helps you with so many
Wow.
different. Yeah, you can cover so many different things with that, with the SBA 7A loan. Equipment, like I said, new ground up, new construction, improvements, working capital, so you can hire people. It covers a lot of ground.
Wow. That's pretty interesting because for people who are getting started or people who have been in business for a while, I guess that's the question. How long do you have to have been in business to get that
So
particular
the thing
product?
is, the 7A loan, you can be a startup, and you would have to put money down as a startup because you have to have some skin in the game. However, if you've been in business for at least 2 years, let's say if a business has been leasing an office, they've been in business
Mm.
2 to 3 years, and now they decide, it's time to go from leasing to owning. Just being in business 2 years and having two solid tax returns, that will qualify. And there's other qualifications, but that would initially qualify a business for 100% financing.
Gotcha. So, you touched on it a little bit, but the documents that they would need is 2 years of tax returns. Um, Again, is that still the 0 to 10% down payment?
Yes, so the documentation is the same for a new business as it would be for an existing business, in the terms of the actual documentation, some sort of tax return, income statement, balance sheet. So they want to see that the business is making money. Now, for the startup position, that loan will be done. They would look at your personal tax returns, but if you were acquiring a business or starting a new business, they would do a projection. Or I could do a projection based loan. So me and the business owner would sit down, and I would say, well, you're acquiring. I mean, you're starting a new business. What do you think this business is going to make, and what do you think the expenses will be to run this business? And we would project what you think those numbers would be, and that would be the underwrite. So the loan will be underwritten on a projection.
Gotcha, gotcha. And then is there, like, if they're looking back on their personal tax returns, is it based on the income of their personal assets, or just the income of or the projected income of the business?
Well, they do look at your personal assets because they want to make sure that you are making sound financial decisions on a daily basis, right? So when you go from, having a job, or being self-employed off the books, so to speak, they do want to see that there's potential. Like if they loan you the money, they want to see that there's potential for you to grow your business. That's the goal of the SBA. They want to lend money to help businesses grow, to start businesses. So to answer your question, yes, they would look at your stability prior to starting a business. It's not a huge
Gotcha,
factor. It's not a huge factor, but it is a factor.
gotcha, gotcha.
Mhm.
And then is there a credit score requirement for on the business side or the personal side for the SBA loan?
There used to be. There used to be a minimum score of 680. Now, I actually closed the loan the other day where believe it or not, the credit score was 595. But the deal was so good that I was able to package it, do a really good write up, and it ended up getting approved. So credit score is important, but what's more important is how good the deal looks on paper.
Gotcha. 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 And then typically for the SBA loan, how long does it take, start to finish?
I would
approximately?
say, yeah, we all like things done quickly. But as we all know, our U.S. government is not as fast as we are in the private sector. So I would say for anyone applying for an SBA loan, 60 to 90 days would be something I would, bet on. 60 to 90 days. Anything less than
Mhm.
60 days, it has to be the most incredible loan ever done, right? I mean, all the documentation has to be right. All the questions have to be answered. The appraisal has to come back perfectly. The contract, like there's like no mistakes. So I would say 60 to 90
Right.
days.
Okay. And you brought up another good point. So an appraisal is sent out by the lender to appraise the structure, the business
Yes,
office, the apartment building, whatever it is. Okay. Okay.
yes,
And
yes.
I know the rates are fluctuating now, but on the SBA commercial side, kind of what's a range of what one could expect in this market for rates?
Now here comes the tough part. So um, I'll preface the rate question by saying this. Everything is all pricing is based off of risks. So look at it this way. The SBA is giving you 90% of the money or 100% of the money. So the rate is going to be a little higher because you have less skin in the game. So it's an inverse relationship of down payment and rate. However, the SBA rate is the same for everybody. So you could have a 580 score with a great project or an 850 score with a great project. Your rate is still going to be the same. And that rate
Okay.
currently is for a 7A loan is the US prime rate plus 275. Prime right now is 8.5 plus 275 puts you at 11.25%. Now,
Gotcha.
before we get all excited, oh, 11%, there's no way I'm paying 11%. You're not locked in 11% forever. We're in a
Okay.
heightened interest rate environment. And the key is you can always refinance to a lower rate.
Out of that position, and it's a 30-year fixed um, product, or
No. So the other
okay.
part of the SBA, the 7A loan, is
Mhm.
it's a it's a 25-year amortized loan, but the interest rate is adjustable. So it adjusts the rate adjusts whenever the Fed changes rates up or down, but your payment adjusts yearly. So if rates go up, that next year, your
Okay.
anniversary date, your payment will go up. If rates go down, then on your anniversary date, your rate goes down. So, and
Right.
there's a 3-year prepayment penalty. The first 3 years you get the loan. So, but it's
Mhm.
declining. So it's 3%, 2%, 1%. And then at the end of 3 years,
Mhm.
depending upon where rates are, you can refinance, make the decision to
Gotcha.
refinance. Yeah.
Is there a cap on that adjustment?
Yes, there is a cap on the adjustment. The cap is 2%.
Okay. So it can't go up anymore. Let's say we're at 11 now, it wouldn't go up more than 13 or
Correct.
13. Yeah. Okay.
And each
As a
lender
max.
is different. So the lenders that I send deals to, their cap is 2. But some lenders may be lower, some may be higher.
Gotcha.
Yeah.
Gotcha. Okay. Anything else about that product that you think people should know? Like, is it better for, does it matter what your structure is, your business structure? So if you're an LLC sole proprietor, or if you're an LLC partner, or if you're an S corp or a C corp, like, do any of those things matter, or
No,
do they have
none.
any impact
The
on the loan?
business, the entity structure doesn't matter. They don't care if you're LLC, S corp, C corp. It doesn't matter as long as the deal looks good on paper. You look good on paper, and it's something viable. They will take a look at it. And also, too, I just want to say, I think the SBA is a great way to help people get in the door. You know, the how can I say it? The way the market thinks about commercial, yeah, it's big dollars and there's more money, but it also costs more money. The barriers to entry are higher. So you definitely need that 25 to 30% down normally. for an
Mhm.
investment property, or if you're buying, buying a business or whatever. But the SBA provides a great opportunity because there's not a lot of out of pocket costs. There are low barriers to entry. It's just that people can't be afraid of the interest rate that comes with it. That's the biggest thing. When people hear 11%, they're instantly like, oh man, that's too expensive. But you have to look at the overall cost. And if I'm a business owner, I have to think about what's more important, putting 30% down or keeping that 30% in my business. So you have to weigh that option.
Indeed, indeed. So, after that 3-year period, they could actually go back and refi it to whatever prime is at that time.
Right. Or whatever
If that's
index, yeah, whatever index is being used for
whatever
the
the index.
loan. It could be, yeah, whatever the index is, but wherever they decide to go, I would prefer them come back to me and I can find the best deal for them. But yeah, whatever is available at the time.
Mhm. Okay, gotcha. Gotcha.
Yeah.
And so you were talking about another product, the DSCR. What does that stand for?
Debt
Is it
service
DSCR?
coverage ratio. Yes,
Thank you.
DSCR, debt service coverage ratio. That's just the
Mhm.
commercial way of saying debt to income, right? So
Okay.
a DSCR loan basically is a loan that's financed solely off the income of the property. They don't care how much your W-2s are. They don't care how much money you bring home. All they want to know is, can the property support the loan? And it has to be a minimum of 1.1. In other words, if the mortgage is $1,000, your property has to at least bring in 1,100. So that's the key. And the DSCR loan is no documentation required. Is a minimum credit score of 650, and in most cases, the down payment is only 20% to acquire a property.
That's not bad. That's not bad. So if you have a business and your business is generating um, income that would be over whatever the mortgage payment is, basically, then
Mhm.
this would be an excellent product for you.
Right. Well, so this product is for investors, right?
Right.
And I
Hmm.
can do a DSCR loan up to a 15 unit apartment building. So you would basically put in an application for, let's say it's a 10 unit building, and
Hmm.
all 10 units are rented. Well, we would just make sure your credit score is where it's supposed to be and you have the down payment. But after that, the property just has the cash flow the right way, and the loan closes in about 45 days. It's a really simple, streamlined
Wow.
process.
Wow.
Yes, very streamlined, very easy.
Wow.
And
Right. And is that loan based on
I'm sorry, there's one kicker that I
go
didn't mention. The property does not have to be occupied.
hmm,
So it could be a
okay.
vacant property. And how they determine the DSCR is the appraiser, when the appraiser comes out and appraises the property, he'll do a market rent study. And if the market rent
Mm,
pay for the mortgage, then you can finance that property as long as it is in rentable condition. Like don't apply for something that doesn't have a roof and floors and think you're going to get a loan, but it has to be in rentable condition. And if
okay.
it's vacant, if the market rent can cover it, then you'll get the financing, and you just have to eventually put a tenant in there.
Gotcha. Gotcha. So that can be done on a 1 to 4 non-owner occupied and a 5 to 18 non-owner occupied.
Correct.
Well, 5 to 18, it wouldn't. I guess you could live in one of the apartments and rent out the other 14. But yeah, okay,
Well,
okay, that's a pretty good. That's actually
technically it's for investment purposes only, so you're not supposed to live in the property because then it's owner
at
occupied.
all.
Right.
Okay. Thank you for making that distinction.
Yeah.
Okay, because sometimes with the millennials, they're doing house hacking, where
Mhm.
they live on, maybe they get a duplex, live on one side and rent out the other side. So
Right.
this wouldn't apply for that type of situation. It has to be totally for commercial use.
Correct. Investment use, and it could be in your personal name or it can be in an entity name.
Okay. On the SBA loan, can it be in your personal name as well as an entity?
No, it has to be in an entity.
It has to be in an entity name.
Yes.
Okay, great. I'm glad we made that distinction as well. Okay. And then there was something on the SBA. I want to jump back to that for a minute. The
Sure.
50% occupancy. Can you talk about that a little bit, what that means?
Yes, I'm glad you brought that up. So, amongst the requirements to purchase through the SBA, your business has to occupy at least 51% of the total square footage. So, an example, let's say if you purchase a mixed use property, and I'm using mixed use for a couple of reasons. So, let's say you purchase a mixed use property, so you have a storefront downstairs, and I don't know, pick the number of apartments, 2 or 3 apartments upstairs. If you're going to run your business out of that location, that storefront has to take
Mhm.
up at least 51% of the total square footage of the building. It can't be 49, it can't be 48, and it can't be 50. It has to be 51% or more. The flip side of that is why I picked the mixed use is because some business owners will say, well, hey, I'll buy a mixed use property that has apartments in it and the apartments can pay the mortgage. That's true. That will happen. But when the SBA is doing the underwriting, they will not take into account the apartment income at all. Your business has to
Mm.
be able to support 100% of the debt service because they're looking at it as if we underwrite this loan with apartment income, what happens when the apartments become vacant? Are you going to have to,
Mhm.
will the loan get foreclosed on? Will you no longer have the business? So your business must support 100% of all the bills in the building.
Right. So that assumes that the store is the business. What if it's a real estate investor and they do real estate as their business, and the store is like bonus space, it could be used for anything.
Well, one thing the SBA
No.
they pick what they finance, and speculative businesses they don't finance. So if you're like a house flipper,
Gotcha.
casino, anything lender, they won't do anything like that.
Gotcha. Gotcha. Okay. So then you'd be more into the DSCR type product or some other product.
Yes, that would be a great option for a DSCR product because you could basically get in the building 20% down as long as the building cash flows and appraises,
Oh,
no questions asked, and it's an easy process.
gotcha.
Yeah.
Gotcha. Okay. So, do you want to talk about anything else about DSCR you want to point out before we move on?
I just think that DSCR is a great way to help investors buy property because there's no documentation requirements. It's basically, do you have the 20% down? Do you have the average credit score? And is it a good investment? I just think it's a great program. It's been around for years. It's just coming more into light now, but it's been around for at least 25 years. It's been around a long time, and I'm just happy that it's out there and people can realize that they can buy their first investment property. So I look forward to helping most investors, as many investors as I can, get into those products. So, but yeah, that's pretty much it for that.
Indeed, indeed. That product sounds awesome. So, and like the part about it I like best is that the income is based on you know the market as well as the actual, if they're in business, and if they're not in business already, it'll be projected based on what that market is generating at the time. That's pretty cool.
Yeah, it's a
Yeah.
win-win situation.
Yeah.
Yes, yes, it is.
In, indeed. Indeed. And then the last one that we're going to talk about today, and like I said, Mr. Moton does quite a few different types of commercial products or products for commercial use, commercial investment use. But we're going to focus on these three today. The last one, I think we're going to talk about the fix and flip. Is that the one we want to do?
Yes, we can definitely talk about that.
Okay.
So
A lot of
as
our
you as
investors
you
out
know,
there doing the fix and flips. Yeah.
yeah. So as you know, our entire country is being gentrified. that's that's a bad word in some places, and is a great word in other places. But our entire country is being gentrified, and I've been able to help tons of investors from California to Boston acquire properties, flip them, flip and to sell, or flip to hold. So I have a very unique product to where I can do a fix and flip loan, no appraisal, and we close within 7 days once clean title comes back. I can finance up to 90% loan to cost, and there's minimum out of pocket, and it's a interest only loan, of course, because most of them are. And in some cases, if an investor owns other collateral, we can pledge the other collateral, and then there's no money out of pocket. So there's a few ways I could do it. That's a more exotic way. That doesn't happen too much,
Right.
but generally, they find a property. I get the financing done. We close in about a week or two, depending upon how long the title takes to come back. And then we close the loan. They do the construction, and in some cases, they want to sell the property or they want to hold the property. If they want to sell the property, they just sell the property, and when they sell, the loan is paid off. If they want to hold the property as a rental, the loan automatically flips into a 30-year fixed. So
Nice, nice. So for the construction part, how long do they have to do the interest only before the note becomes due? Are there payments along the way? Like, how does that work? What's going on during the construction period?
So it's normally interest only for 12 months. And there's two ways you can structure that. You can either take the 12 months interest payment at settlement, so then there's no monthly payment, or you can elect to make the monthly payments, every month until you're finished the project. When you come up to your maturity date, if you're not done, you can request an extension. There's going to be a fee for that, probably a 1 to 2% fee. But if you are done, then you just go through the process. Either the property's on the market, right? And they'll allow, some lenders will allow you to, for marketing time, right? Or you decide you want to hold it, then you automatically flip the loan into a DSCR 30-year fixed.
Gotcha. So is it a three-part process? Meaning, one, if you're purchasing the property, you purchase it from whoever the owner is. And then two would be the construction period. And then three would be either the resale or the conversion into the DSCR or the whole mortgage.
Yes,
Is that how is it those three stages typically?
pretty much. Yes, it's a three-part. I mean, there are little parts in between, but on the grand scheme of things, yes, it's really three steps. You buy the property, rehab the property, and then either sell it or hold it at the end, and then pay the loan off, of course.
Okay.
But yeah, it's just pretty simple. And I've been
Gotcha.
able to help,
Gotcha.
a whole bunch of people with that product.
Yeah, that's pretty amazing. I think people well, one of the things that I hear from investors is that you have to have so many deals under your belt. Otherwise, it either impacts the interest rate that you pay, or some lenders won't loan to you unless you've done something already. So, how is it for your company?
It's pretty much the same. They want you to have some experience, but I do have some lenders that take first time flippers and first time rehabbers. So it's the same across the board because we're, investors, the lenders are all pretty much the same lenders. You have some that are, better or worse, but that example you made is correct. Yes, if you're the less experienced you are, the higher the money cost to borrow, or in some cases they won't lend it to you at all.
Hmm. Yeah. And then the condition of the property, is that an issue as well or no?
Sometimes some lenders they stay away from properties that are more than 100 years old. And then some lenders want the property to have a certain foundation. They don't want like foundation or environmental issues. Of course, nobody wants that. But generally, if it's four walls and a roof, you know, and you have some experience, they'll lend you the money for it.
Okay. So if it's a burnout or it's been, sometimes we see things that have been gutted. You know what I mean? They've been gutted all the way through. Um,
Yeah,
that's a yes or a no or
that's a yes. Each lender is different, and I'll say it's property specific because it could be a burnout, and that burnout may constitute a tear down, right? I mean, some
Mhm.
of it may be able to. Sometimes the burnout may be able to be salvaged, and sometimes it may need to be burned down, torn down. So now
Mhm.
that fix and flip turns into ground up new construction, which is
Mhm.
under the same premise as the fix and flip loan. So there's always a
Gotcha.
way to
Got
figure it out. Yeah.
gotcha. Yeah. And I know we said we weren't going to talk about this, but there was a question about land because not a lot of lenders finance the purchase of just land. So does it have to be land with a construction project in mind, or can you just purchase the land?
Yes, you could do both. They would prefer there's a construction project involved because land is so tricky. One day the land could be worth one number, and 2 years later it could be significantly less or more.
Mhm.
But land is usually 50% down, max 55 LTV. So they would prefer that you're going to do some construction on it, but it can be purchased. Yes, just solely by
Gotcha.
itself.
Okay,
Yeah.
gotcha. This has been really, really great. Really, really great. So we talked about you do a lot of products, but we talked about the SBA loan, which people can do 0 to 10% down
Mhm.
payment. The interest rate is a little bit higher, but it allows folks to get in with less money out of pocket. And there's a 3-year um, adjustable. Well, no, it's an adjustable product, if I understand it correctly,
Yes.
with a two margin cap on it. And after 3 years, if they want to refi out of that product into something else, they can absolutely do that at that time. And then
Yes.
we talked about the DSCR, which is kind of like a no doc loan in terms of language.
Yeah. Yeah, that's true.
But
That's true.
basically, it's based on the mhm, the income that the property is producing or has the capability of producing more so than the individual who's actually doing the purchasing. So is that a good summary of that
That's
product?
a great summary. That's a great summary. Yes.
Okay. And then the last one is the fix and flip. So talking about 25% down essentially on that product and interest only for they have a year for the payback, or what's the time frame? I don't think I asked you that.
It's normally a year. Normally a
Mhm.
year.
Okay.
Yeah.
Yeah, a year to finish the project and either convert it to a hold and it'll automatically go into the 30-year fix or resell the property, pay back the lender and take their profit. So
Correct.
those are all really, really great. And then we touched lightly on land, but mainly that your company can do a land purchase, but basically a land where you have plans to do construction on that land. The purchase of the land can be included in uh, in the financing,
Yes.
if I
Yes.
understand that correctly.
That's correct.
Awesome, awesome, awesome. So I'm gonna put your contact information up here, but say it out loud for those people who are just listening and they can't see the screen.
Sure. Gregory Moton, president of New City Commercial Capital. My cell phone number is 215-252-6084. The office number is 215-298-9923. And my email is gmoton@newcitycc.com. Oh, and the website is
Okay, awesome, awesome.
www.newcitycc.com.
Awesome. I think my connection is getting crazy because it's not staying on the screen. Let's see if I
Yeah,
hit
it's
it
just going in
again.
and out. Yeah,
But
it's
anyway,
good
I
now.
just is there. Okay, I won't hit it again.
Yes.
Maybe it'll stay up. Okay. So I just want to thank you for taking time out of your busy schedule, busy man, making deals out there. And I want to encourage anyone who is investing or thinking about investing for commercial use in property to reach out to Mr. Moulton. He's got a range of products that are available for you and can work with you to discuss what's the best way to finance your next investment on the commercial side. And I want to thank you always for tuning in. And I hope that you receive something of value today. Be sure to like and subscribe to our channel. You can find us on all social media platforms as Clara Lyons-DeVaughn. So on our YouTube station, there's lots of content on ways that you can maximize your wealth building power now and in the future. That includes your mental, your intellectual wealth. It includes your health wealth, and it also includes your financial wealth, which is very important in these days and time. And at Lyonsview Realty, we have ESP. We provide expertise, solutions, and patience before, during, and after a sale. We assist sellers, buyers, and investors build wealth, and we help real estate professionals build careers in real estate. So if you're looking to buy or sell a property or you're interested in a career in real estate, reach out to us. If you're looking to improve your health wealth, which is another area, check out our Meatless Monday. Y'all know I'm plant-based. So, that's where we get into plant-based information and meals to assist you with a healthier lifestyle. And I just want to thank you again for coming today, Mr. Moulton. My name is Clara Lyons-DeVaughn, for those of you who are out there. Some people ask, what is a Lions View lifestyle? Because if you on it, so a Lions View lifestyle where the possibility of what's available when your life is in order, when your finances are in order, your health is in order, your spiritual mindset is in order, what's available for you to live at the best level. So I just want to thank you for tuning in. Um, Check out our YouTube pages for all of the information that is there because, like I said, it's a wealth of information. We tune, you can catch us. This is Financial Fridays. You can catch us live every Friday on Facebook, YouTube, and we have LinkedIn. Fridays at 9:30 a.m. Eastern Standard Time. And you can catch the replay on YouTube anytime. But until then, I want you to keep living your best life. There it is. Thanks again. Greg, I so appreciate you, and reach out to Greg. He's a great, great, great person to be a partner with you in your process for real estate investment. We'll see you next week.
Okay.
Bye.
Thank you, Clara. All right. Bye bye.